Hi everyone, and welcome to our session on postgrad finances, covering fees, costs, and loans. If you've ever asked yourself, can I afford further study, and where can I get the financial support for this, and also what do all those acronyms mean, then keep watching because this session is perfect for you. I'm Lucas from the Future Students Inquiry team, and today I'm joined by my colleague Imogen, and we've collected the most popular questions we get asked on fees. And together we'll give you insight into how to manage your postgrad finances, and also what help is available for you on your postgrad journey. So let's get started with the basics. Imogen, what is a CSP and how does it all work?
Sure. So a Commonwealth supported place, or CSP, is a type of tuition fee that's available for some of our postgraduate degrees. So these fees are partially subsidised by the government, meaning that the overall cost of the course is actually cheaper. Not all courses at our postgraduate level do offer CSPs though, but you can actually check whether a particular degree of interest does by looking at our online course finder page. And students are also going to be advised of the type of tuition fee that they get when they receive their offer email. So the other really important thing to know is that eligible domestic students with a Commonwealth supported place can defer their fees onto a government HECS-HELP loan. So eligible students include like Australian citizens and humanitarian visa holders and even New Zealand citizens who've been assessed as eligible and have not exceeded their HELP loan limit. Alternatively, eligible students can actually opt to pay $500 or more upfront for their contribution amounts and are also entitled to a 10% discount on the amount that they pay, which is a really good option as well if you want to sort of reduce those costs a bit. So for permanent residents with a non-humanitarian visa and non-eligible New Zealand citizens, they're not able to defer their fees onto a HELP loan or receive that upfront discount. For those students, they're going to need to pay their fees upfront for each study period by the relevant due date. The key point though is that for all domestic students with a Commonwealth supported place, the fees will be much cheaper than for students without a CSP. So it's a really great option if you can get it for our postgraduate courses.
Okay, great. Is there a way to check what a CSP course fees are and to figure out exactly how much a student will pay per year?
Yeah, so the fees are usually published mid-September for the following year. It's generally best to have a look at the Macquarie handbook and get an idea of the specific units you want to study before starting to search for the relevant fees. This is just because the exact cost of the student contribution will depend on the units being studied rather than the actual overall course. So the best place to actually find those indicative CSP fees is on our Commonwealth Supported Places webpage. Once there, you can just select postgraduate student and then the year you're searching the fees for. So for students wanting to come and study with us next year, that would be 2022 once those are updated on the page. Really important to remember though that the fees published on the web page should be used as a guide only. The actual exact unit fees that you need to pay will be listed in eStudent, which is our student portal, under the My Finances tab once you're enrolled in those units.
Let's talk about what if a course doesn't have CSPs available. Does that mean students have to pay their fees upfront?
Yeah, so if you're a domestic student and your course does not offer Commonwealth supported places, your tuition fees will be offered through what's called a domestic fee paying place, or DFEE. Eligible domestic students with the same residency requirements that I just mentioned before, they can also defer their fees onto a government help loan. In this case, it would be FEE-HELP, which functions pretty similarly to the HECS-HELP loans that are available for CSP students. The other difference, though, for DFE students is that there's no discount for paying upfront for those who are eligible to defer their fees onto a FEE-HELP loan. But the thing to keep in mind is that even if you're in a DFE place, if you're an eligible domestic student, you can still defer those fees.
Okay. So if I was planning on doing a 2-year full-time postgraduate course and I don't get a CSP place in the first year, is there a chance I can get a CSP position in the second year? And if so, how do I apply for that?
Yeah, so really good question. So the only way to receive a Commonwealth supported place is to apply again during the next relevant admission period. You'll then be reassessed on the criteria for that course. If a course has limited CSPs, then it's likely you'll be assessed on a competitive basis with the other applicants during the admission process. We generally recommend seeking academic advice from the relevant department before applying again for a course that you're already admitted to, as it may impact on the decision you make after you have a chat with them. And the other thing to keep in mind is that while you can apply for recognition of prior learning, or RPL, for the year you've already completed in the DFE version of the course, it isn't always guaranteed that you'll receive credit for all of your completed studies when you move across into the new CSP course.
Okay, so who is eligible for FEE-HELP? And if students become an Australian citizen halfway through a program, say, will they still be eligible for FEE-HELP for the rest of the course?
Yeah, so you're eligible to defer your fees to a FEE-HELP loan if you're in a domestic fee paying or DFE course. You also need to have not exceeded your help loan limit and to meet those residency criteria. So the specific residency criteria means that you're either an Australian citizen completing at least one of your units in Australia, or you're a humanitarian visa holder completing all of your units in Australia, or you've been assessed as an eligible New Zealand citizen by Macquarie and are completing all of your units in Australia.
Okay, and so do students need to apply for that separately? And what info do they need to apply for the FEE-HELP loan? And also, how long does it take to get approved?
Yeah, sure. So when an offer is made, students receive information in their offer email about how to accept their offer and how to complete the relevant help loan forms to defer their fees. This is done on the Macquarie student system I mentioned before called eStudent. To do this, students will also need to provide their tax file number, and students need to have an approved help form by the relevant study period census date, which can actually be found on our Important Dates webpage, to be eligible to defer those fees.
Okay, and so how much can students borrow overall? And do they pay interest on that loan? And also, how do they repay it?
Yeah, so each year the help limit changes, and you can actually find information about this on the relevant Macquarie fee web pages, so for either CSP or DFE courses, and it's usually available from about mid-September for courses starting in the following year. So as an example, the help loan threshold amounts for 2021 are $155,448 for medicine, dentistry, and veterinary science students, as defined in the Higher Education Support Act 2003, and then $108,232 for all other students. It's an important thing to keep in mind that your help balance is actually now renewable as well. So this basically just means that any compulsory or voluntary help debt repayments will actually top up your help balance. So these repayments are then applied to your help balance from the 1st of July of the following financial period. And what this does is that any repaid amounts applied up to the help loan limit can then be borrowed again for future study, which gives you a lot more options if you want to come back. You can also check your help balance on the My Help Balance website, though students deferring their fees to a help loan for the first time won't actually be able to see their balance on the My Help Balance portal until the university has been able to report their enrolment details to the government. The other thing to note is that interest is not charged on any help debt, which is really good. However, it will increase on the 1st of June each year in line with CPI and may change according to any legislative changes. But the lack of interest means that it's a pretty good loan, all things considered.
Yeah, absolutely. So when are those repayments due then? And what are students' options if they experience financial difficulty and can't afford to pay by the due date?
Yeah, really good question. So there is a payment due date for each study period, which will be listed on our fees webpage. So that can be accessed by students.mq.edu.au/finances/fees. Once enrolled into units, you can also log into your eStudent portal and print a copy of your statement of outstanding charges, which will also let you know when payments are due. And for students deferring their fees, they need to have completed those relevant help forms, as I mentioned before, with their tax file number and have this approved by the relevant study period census date to make sure it's all gone through. If, however, you're having difficulty making payment, domestic students may actually be able to request an extension to pay by the census date instead of the payment due date, which is usually about 4 weeks after the payment due date for our main study sessions, which gives you a little bit more time if something's making it harder to make those payments. There's some more information about how this process works on our fees webpage, You can find that specific information on students.mq.edu.au/finances/fees/problems-paying. With that said, students do still need to pay by the census date at the latest, just to make sure they avoid having their enrolment cancelled due to non-payment of fees. But there's absolutely options available if there are issues with paying.
Okay, great. Thank you. So if I've deferred my contribution fees under FEE-HELP, how does it affect my tax? And how can I pay this loan back and plan ahead?
Yeah, so the first thing is that any student with a help debt should advise their tax agent. The 2022 repayment threshold is currently $47,014, so students earning over this amount will need to start repaying their help debt. The specific amount of your repayments will be based on your income, and these repayment rates can actually be found on the Government Study Assist website under loan repayments. Students should also advise their Work's Human Resources Department that they have a help debt. This way, their workplace can actually make suitable arrangements to allocate the appropriate amount to the help loan. Alternatively, once students complete their tax returns, they'll be advised how much they will need to repay for that period. It's really important to remember that any compulsory or voluntary help repayments will top up your help balance only after you've completed your tax return and have been issued with a notice of assessment from the ATO. But there's that option to have more balance available in the future so that you can continue your studies at a postgrad level.
Okay. And so rounding up our postgrad finance FAQ session, for new students, what are the academic progression requirements to be eligible for a CSP or deferment of fees from 2022?
Great question. So if you begin your enrollment with a university on or after the 1st of January 2022 and apply for either a Commonwealth supported place or a HECS help loan or a FEE-HELP loan, the 50% pass rate will apply. This basically means that once you've undertaken 8 or more units in a course, you must have passed at least 50% of your total attempted units in order to remain eligible for your CSP or your HECS help or your FEE-HELP loan. If you don't meet the pass rate requirements, then you will have to actually pay the tuition fees up front until you improve your pass rate and regain eligibility for Commonwealth assistance. If you choose to change courses or providers, though, your completion rate won't actually follow you. This basically allows you to reset the clock on that 50% pass rate. If you have a low completion rate, though, and you can demonstrate that there were special circumstances that have adversely affected your academic performances and has impacted your ability to kind of meet that 50% pass rate, then your education provider can allow for consideration of these impacts, making it slightly easier to move through that process.
Thanks so much for your insights, Imogen. I hope today's session answered everyone's questions and provided more detail on how you can manage your postgrad finances. We've put all the useful links from today in the video description. If you do have any more questions relevant to your personal situation, please contact the postgraduate team on 9850-6791, or you can email them on postgraduate@mq.edu.au. We hope to welcome you to Macquarie University soon. Take care, and remember, if you have any questions, we're here to help. Thank you.